Hello and welcome to the Daily Finance Wrap, your daily dose of personal finance updates covering investments, insurance, loans, real estate, and everything else about your money. And of course, we bring in the experts to do the analysis. We also will be taking viewers' questions and queries, so please keep commenting on our live stream that you can see on our YouTube live. I am your host, Stacey Pereira, and in today's episode of Daily Finance Wrap, we are going to be talking about all things insurance. That's right, from what is the basic difference between a life and a general insurance, and whether a health or an accident cover, what does it actually cover? These are some of the questions that you and I may have asked time and again while going ahead to purchase a policy. Does those add-ons that you see in a policy, does it really help? Should you be taking those on? We'll try to simplify all of these jargons around insurance for you in the next 30 minutes. We'll also try and give you a roundup of all that transpired in today's market action and of course the latest business and corporate updates. Let's start by taking a look at all the top stories of the day. Now, if you look at the Indian markets, it was quite a bit of a tug of war between the bulls and the bears on the Lal Street, with the benchmark indices, both the Nifty and Sensex, surrendering most of their intraday gains, but managing to snap and that losing streak and closing in the positive. The day began with strong demand. However, the later half of the session saw some selling pressure, pretty much erasing all that momentum that the Sensex saw, tumbling about 900 points from the day's peak, while the Nifty too shut shop with just about 64 points. Among the gainers, you had the likes of an M&M, Trent, Tech Mahindra, HDFC Bank, as well as Eicher Motors. Whereas on the flip side, we had insurance names like SBI Life, HDFC Life, Reliance, as well as Tata Consumers among the laggards in trade. Moving on to the Indian rupee, where the Indian rupee slipped to its all-time low on Tuesday with pressure from the dollar demand that was seen among foreign banks as well as importers, including the local oil companies. The rupee hit a low of 84.41, similar to that previous record low of 84.4125 that it hit last week. Likely intervention by the Reserve Bank of India is perhaps what helped the currency avoid further losses in today's trade. We also saw the dollar index, which was tad bit higher at 106.3, whereas other Asian currencies also trimmed their gains because of the stronger dollar. Moving on to other market action, and this time from the primary markets, we saw the NTPC Green Energies 10,000 crore IPO, which opened today. The IPO garnered a subscription rate of about 24% on day one. It saw bids close to about 14.2 crore shares out of the total 59.3 crore shares that are on offer. Now, if you look at the distribution, where we did see a retail individual investors showing strong interest for this IPO, subscribing by about 100% of the allocated 8.6 crore shares that were put out for the retail investors. Whereas on the other side, the non-institutional investors, they bid for about 1.2 crore shares against what is allocated of 12.9 crore shares. Qualified institutional buyers, or QIB as we know them, those showed very minimal participation in this IPO, subscribing to just about 7,700 shares out of the 25.9 crore shares that are earmarked for them. Remember, the price band for this IPO is set around 102 to 108 per share, with retail investors who can participate in the minimum lot size of about 138 shares, which will require an investment of about 14,904 rupees. Well, from that primary market to other stock action, where we saw a Z Entertainment shares jump quite a bit in trade, and this after there was news reports of Puneet Goenka stepping down as the managing director. However, he will remain the company's CEO. The decision now will allow Goenka to concentrate solely on the operational duties that are being assigned to him by the board. Now, following this news, we did see Z shares surge by 7.35%, reaching an intraday high of 123 rupees, but settling in at 122 apiece. Goenka's resignation from the MD position took effect on business hours of November 18, and he will assume the role of a CEO the same day and from then on. Moving on, then there are more report related news where, according to a latest report, the central government is set to introduce a major reform in the insurance sector. And we are talking about insurance today. This news particularly says that it perhaps could allow 100% foreign direct investment into the insurance sector. These changes are being outlined in the proposed insurance amendment bill, which is expected to be presented in the winter session that will start later this month. Currently, the FDI limit for insurance companies is somewhere around 74%, but the new bill, the amendments that will come out, will perhaps remove this cap altogether, allowing even foreign insurers then to enter the Indian market independently. And the change is also expected to attract large international insurance companies, increasing their current restrictions and that limits that are kept for agents. And they are allowed to only now represent one life as well as one general insurer. That cap would also perhaps be amended if it goes through. These reforms are part of the government's effort to boost insurance penetration in India, which currently remains as low as 4%. And like I said, we've been talking about insurance, and that's what we're going to try and simplify today in this next part of our show. And that really is about how should you go about picking your insurance. It is a very vast topic, of course, but we'll try to cover as many aspects as we can in this episode. But we do promise to break down all of those details so that you know how you're making those wise choices going ahead. You should, what exactly should be the criteria, how you should choose your insurer or the policy, what are the kind of premiums that you should be what you should be paying, what is the ideal coverage. These are kind of questions that come up time and again, and you should try to have some bit of background when you're going through that, and that's what we'll try and discuss and simplify. And joining us to do that now on this Insurance 101 session is Aditya Shah. He's a financial planner at Hercules Advisors. Thank you so much, Aditya, for joining us and giving us your time. Let's just first put it out. In fact, one of the anecdotes that you had compared recently was about having insurance policies and how people buy iPhones but do not go ahead and buy insurance policies. And perhaps the comparison that you were making was to see the cost of a health insurance policy for a 30-year-old coming somewhere around, if the sum insured is 1 crore and the premium you would pay would be somewhere similar to an EMI for your iPhone. But still, we see so many people with iPhones and very few of them with health insurance policies. And like you pointed out and said, that we're pretty much just one hospitalization away from poverty. Let's just start by understanding the different types of insurance that are out there and that exist, and what should be the appropriate age for someone to go ahead and buy a policy or even get familiar with what insurance is.
Good evening, Stacy. So, as you said correctly, Indians are one hospitalization away from poverty, and insurance is the number one investment that you should be doing once you have saved money. But there's a sip, tip, and hip philosophy that I really follow. Number one point is whenever you have saved money, the number one thing that you need to buy is health insurance. So, what is health insurance? It is the unforeseen risk of hospitalization that you may get. Insurance company covers that risk, and in the future, if you get hospitalization, the insurance company will pay for that hospitalization. Today, critical illnesses like diabetes, hypertension, cancer are cost a bomb to treat. For example, cancer costs about 40 lakhs, 50 lakhs to treat. And now, health insurance companies have those plans where they cover cancer per se, and those costs are borne by insurer. So the number one insurance that you need to buy is a health insurance plan. Health insurance in terms of a comprehensive cover, which we will talk later during the show, is the number one thing to buy. Point number two to buy is a life insurance. So life insurance comes in various ways. It comes in whole life insurance, it comes in ULIP, it comes in a pure play term plan. So that's the next thing you need to buy. Who needs the life insurance? Only those who have dependents on them or those who have loan liabilities on them need to buy a term plan. So what is a term plan? Let's say you buy a term plan up till the age of 60. If something happens to you up till the age of 60, the insurance company will pay 1 crore, 2 crore, 3 crore, whatever is your sum insured to your loved ones. So that covers off any liability that you may have. Suppose you have a loan of 2 crores, then the term plan payout can cover up the liability that you have. The third and the final insurance that you need to buy is a critical illness cover. So what is that cover? Your health insurance covers the cost of treatment of cancer. But when you undergo cancer, there can be a chance of loss of employment. And due to that loss of employment, your income can go for a toss. And if your income goes for a toss, a critical illness plan gives you a lump sum payout, so which you can use for your life situation. So for example, if you are diagnosed with cancer and you have a 50 lakh critical illness cover, 50 lakh will be paid to your bank account, and you can use that to carry out critical life processes, and your critical life processes do not hang about. So three types of insurances you need to buy. One, health insurance. Two, life insurance, as in a pure play term plan. And number three is a critical illness cover, which will help you in times of critical illnesses.
Right. So you've marked out three of them that one should buy. And I know this is quite, the whole topic of insurance is quite vast. So today's discussion, we'll try and restrict ourselves and talk more about general insurance, which mostly covers your non-life part of it. And, even especially health insurance for that matter. We'll talk more about those and the kind of differentiation between the coverage that one provide. What is so different between a life insurance cover versus a health insurance that you are going to get, because normally you would go ahead and buy a life insurance, like you did point out that the difference is it's for either the loved one post the demise of the policy holder. But what is the critical difference between one, and why does one need to have both if not just one?
So health insurance is a necessity for all of us. Why is it a necessity? Let's take for example, what is the cost of treating cancer today? A cancer surgery costs about 10 to 12 lakhs. An immunotherapy or a chemotherapy treatment costs about 40 to 50 lakhs. It has to be taken year after year, depending upon your progress. So the point is that all critical illnesses are costing a bomb to treat, and medical inflation in India is at about 14% and is growing rapidly. So a 5 lakh treatment today will cost 10 lakhs 5 years down the line. And if you are diagnosed with a critical illness, all your savings can get wiped out. That is where health insurance comes in, and health insurance takes up this liability. You pay a premium to the company, and the company will cover your unforeseen illnesses that happen during your lifetime, and that's how you protect your savings. Now there are hundreds of health insurance policies out there. We can discuss the features, but even before you buy a life insurance, health insurance is absolutely the critical need of the hour today. Every Indian must have it. Even the government is very serious about it, that they have launched Ayushman Bharat for people who are above 70, for senior citizens above 70, because healthcare is the primary basic fundamental right of a senior citizen, and government is acknowledging that fact. So health insurance is very, very important, and buy it much before you buy a life insurance.
Right. So you're saying health insurance should take priority even before life insurance. But there are also people who might get confused here, because often we also hear about, having life insurance with these riders, or, a term insurance that comes with a critical illness rider or an accident cover. How is that really different? And do these add-ons really help, or are you supposed to be taking two separate policies?
So for us, in our opinion, we like to separate our term plan with our critical illness rider, because within the term plan, the critical illness rider cover is very, very poor and does not warrant you to pay that kind of a premium. So in our opinion, you must take a critical illness policy separately. So basically, what is a critical illness policy? Let's understand first. The difference between a term plan and a critical illness policy is this: in times of a term plan, it gets only activated if there's a death event per se. So if somebody dies before the age of 60, and they've taken a 2 CR term plan up till the age of 60, there'll be a payout only if the death event happens. In critical illness, what really happens is, if you are diagnosed with a critical illness like cancer or a heart disease or anything of that sort, even though when you are alive, there is a payout per se that really happens. So that is the difference between both of them. And we recommend to take a separate policy, separate term plan, and a separate critical illness policy, because a separate critical illness policy can give you a higher cover of 50 lakhs or 1 CR where a cancer is really diagnosed. And mind you, if a cancer is diagnosed, it is one of the most toxic diseases that you can ever get, and it is very, very painful to treat and go through cancer per se. So separate them out and buy two separate policies.
that gives us a separate, not just go with the riders, but have a separate health cover altogether. Well, let's also, because health insurance is such that you are reading between the lines, that it is often for us to understand what exactly is happening there. Now, there is the most common mistakes that people tend to overlook. Could you shed some light on that, and what they should be actually ticking off the box while they're going ahead and purchasing a health insurance policy?
We've developed a 10-point checklist. Health insurance is one of the most complex types of insurances in India, and we've developed a 10-point checklist to buy health insurance. Some of the points are: A, no room rent limit. Your policy must not have a room rent limit. Room rent is the rent that you pay to stay in the hospital, and your policy must not have any limit on that. Point number two is there should be no co-payment. There should be no sharing of payment between you and the insurer. Point number three is pre-hospitalization and post-hospitalization cover should be there in your policy. It means before you get hospitalized, the insurer must cover all the bills. After you get hospitalized, the insurer must cover your bills. The most important point in the health insurance policy today is restoration benefit, which means on a 10 lakh policy, you can use it multiple number of times during a year. Old PSU policies did not have this. So once you use 10 lakhs in the older policies, your policy got expired and you could not use them again. Now, today in newer policies, it gets restored back again to 10 lakhs, 15 lakhs, and 20 lakhs, and you can use them multiple amounts of times. So, restoration benefit is one of the most important benefits that you should take care of. Point number five is consumable cover, which means all PPE kit, all syringes, all of those things should get covered in your policy. Point number seven is uh, the hospital network of the insurer is really very important. You must go to the insurer where a hospital network is really very good so that you get the cashless facility and not the reimbursement facility. Then the claims experience within the insurer. So it should not be claim settlement ratio because all insurers are known to manipulate claim settlement ratio. You should look at the claims experience within the top insurers is really very good. Within the bottom insurers, it is really very bad. So that is something also that you need to consider. And finally, one of the most important point that you should consider while buying a health insurance policy is an agent. A good agent who has good experience in claim support. If he's able to support you in claims that have been rejected at the first time, they can get resolved per se. Then the next point is pre-existing diseases waiting period. So health insurance policies have a pre-existing disease waiting period of about 3 years. Many policies offer the waiver, a waiver of paying higher premium and getting those pre-existing disease waiting period waived off. So these are couple of benefits that you should really watch out for. And one of the most important benefits is a good agent who will support you in times of claims. Buying a health insurance is like flying a plane. It is too complex, and somebody trained enough who could support you in claims is really very important while buying health insurance.
Right. In fact, I was just going to, add on to that. How do you decide on which insurer to go ahead with, especially because the products are quite similar out there, and it might just become the fact of a, okay, 10,000 premium versus 11,000, and somebody is just flown away. So this checklist that you did provide, I think, should give at least a starter kit for somebody who's looking at going ahead to purchase a health insurance for themselves, but also just to get a sense of how does one make this decision, what is that ideal coverage that we are looking at. That I read somewhere that it should be at least 10 times your annual income. How do we come up with such numbers, or what are the metrics that we're supposed to be following to come up with the coverage as well as the premium you're supposed to be paying?
So I had shared this very interesting quote, which went viral. That about on the health insurance side of it, for a 30-year-old today, a 1 CR cover can easily be made at 10 to 12,000 rupees, and that is required today. The cost of treating illnesses is rising dramatically in India. It is at about the inflation is at about 14%. It is very important to make the cover. So, what is the ideal? The first question that we need to ask is, what is the ideal time when you need to get a health insurance? That ideal time was yesterday. The next best time is today. After your first saving, the first product that you need to buy is a health insurance. It is not a mutual fund. It is not anything else. It is health insurance. Point number one. Point number two is what is the ideal cover on the health insurance side of it. The starting cover has to be 10 lakhs, slowly and steadily migrate towards 25 lakhs, and 50 lakhs is the advisable cover. These policies must provide no claim bonus, which is nearly about 50 to 100% each year. And today, products are available where unlimited no claim bonus is available. So, my opinion is start with 10 lakhs slowly and steadily as your income rises, upgrade to 25 lakhs or 50 lakhs.
Right. So that's quite interesting. That breakup really helps us there to understand how we could go, how, decide on that ideal coverage plan. Now we've understood the do's, at least for now. Let's look at the don'ts, because that is something that is cropping up and making a lot of people nervous, we would say. There's a lot of mis-selling that is happening within the health insurance space, especially if you look at, if you could just throw some light on how this really goes on to happen. What should one be aware of while something is happening of that sort, when somebody comes to them and say, okay, this is a policy that you should really look into. It has so many benefits to it. Where should one really keep that alarm bell that should tick off when you're looking at something that could be missold, but at that time sounds too good to be true? So what should be that, other than the do's checklist that we see, what is the don'ts that one needs to be caution about?
So people are very surprised when their claims get rejected, and then they realize what is the truth really. So in health insurance, there are a couple of things that you need to keep in mind. When you buy the policy, pre-existing diseases must be disclosed transparently to the insurer. 99% of the cases where claims get rejected is because you did inform the insurer that this was the pre-existing disease, and the insurer is taking an exception that if you would have informed us at the time of issuance of the policy, we would have not issued the policy. This is called material non-disclosure of pre-existing diseases, and IRDI, the insurance regulator, gives the insurer the right to cancel the policy off. So point number one is material non-disclosure of pre-existing diseases is one of the biggest reasons for claim rejection, and one must be really very careful on them. Point number two is not understanding the terms and conditions of the policy. Terms and conditions of the policy are really very important. What are the waiting periods? After how much time? What will be the cover? For example, if you buy a new health insurance policy right now, cataract is only covered after 2 years. So all of these things must be understood. And the third point is what are the exclusions of your policy? For example, today in all health insurance policies, mostly dental costs are not covered per se. So if you go and buy a health insurance and raise a claim on dental costs, no insurer is going to cover you per se. So what are the exclusions? What are the waiting periods? You should not be doing material non-disclosure. And what is the time when hospitalization is particularly warranted? So all of these things must be kept in mind while you buy health insurance per se. And that's why I told you it is so complex that most people don't understand it properly. And a good agent who is able to understand all of these things very deeply is something that you need to keep in mind while buying health insurance.
Right. Aditya, well, we have quite a few queries that are coming in on our feed. So let's try and get a couple of those addressed. There's somebody asking whether it's better to buy insurance online or through an agent. Now there's, so many options available. How should one be making these decisions?
Absolutely one word answer. An agent who knows claim support. Uh, you don't want your insurer to reject your claims when you need them the most. When you buy online, there's a 5% discount that you really get. But insurers know that they don't have to service you and they will not tell you why your claim was rejected. So categorical emphatic answer is an agent who does claim support, and you have to search for that agent, and agent does not come very quickly, and good agents particularly don't come very quickly.
Right. So you have to, pick and choose, make sure you've done your
Like,
homework
like
as
a doctor,
thoroughly as the
just like
agent.
a doctor, just like a doctor. When you evaluate and try to go to a good doctor, your agent is your doctor when you buy an insurance policy.
Absolutely. A couple more queries. Vineet Patel wants to know, how do you check if you're paying too much for your insurance premium? Is there some way of, making sure you're getting exactly what you're paying for, or perhaps better the coverage for the premiums that you're paying?
So, cheeky answer would be to follow us on Twitter or YouTube. But ideally, you can look at online platforms and compare the premium that you are paying with what the premium online there is. And if there is a massive difference, of course there can be 5-10,000 rupee difference, that is okay. But if there is a massive difference, then you need to consult an expert as to what you can really do and how you can change up your policies per se. Today information flows very fast per se. So as I said, for a 30-year-old, if your premium on health insurance was supposed to be 10 to 12,000 and you are ending up to pay 20-25,000, then you need to really evaluate as to what kind of a policy you are holding per se. So all of these things are readily available and you can check them out.
Right. Interestingly, there's another query. Someone asking that they have a joint health insurance along with their mother, and this is from the company that they work at. Do they still need to buy a separate insurance for the individual per se? And also, if the mother is, been missold that policy, how should they be redirected to the right path? Or should they be surrendering one or keep the other? How should one go about when you do, like, an employee gets something from the company and also goes ahead and buys another policy individually? How should they be juggling between the two?
So first of all corporate people, all corporate personnel who are employed in corporates need a personal insurance. Simple reason: when they will leave their job, their corporate policy will expire, and that is the time when they need health insurance the most. So all corporate people need a health insurance. First point. Second point is, if you've been missold, then contact a good agent or contact somebody who is learned, who will help you decipher what kind of a product that you are really with right now and what kind of product that you want to really migrate to. So here a specialist like a doctor, like a health insurance agent will help you out in deciphering what kind of a product you are in. Is that a good product? Is that not a good product? And what is the thing that you can do? You can surrender that policy, you can discontinue that policy, or what is it that you can really do? So those are the things that need to be evaluated only after looking at the policy person.
Right. So this can also help Charmi Patel, who's asking that her mother was missold insurance policy. How can she fix it now? Because she's already paid the first premium, and it has been a year since then. But is it better to now surrender it altogether, or will she in any form get that full amount back? Is that a possibility, or she should just forget about
So,
it?
so, so, I guess that's a life insurance policy. We've written a brilliant thread on life insurance policy when they are missold what to do. The two options: to surrender the policy or make the policy paid up. She will not get the full money back. The insurer will cut some amount of money and then give the appropriate money back. But in my opinion, it is better to get that policy evaluated for the next course of action. If Charmi is listening to us, she can reach out to us and we will help her out in whatever decisions she needs to take. However, it is better that she gets all of these policies evaluated now so that she can stop paying the future premiums and future money can be invested in a mutual fund properly aptly.
Right. Finally, just to sum it all up, is there? Suppose I've gone ahead, bought, read the devil in the details, got paid my premiums on time, all of that, but I still get a rejection. Is there any steps that I can take post this, that I can somewhere go? Does the IRDI help me in some sort that I can go, or a grievance redressal for if my claim is rejected?
Yes. So IDI has let down a roadmap which you have to follow in case of claim rejection. So that roadmap is this. First, you go for a cashless claim. If a cashless claim is not available, you go for a reimbursement claim. If the insurer rejects and you are not happy, then there's a grievance cell within the insurer which is called grievance one. You need to approach there. If there also you are unhappy, there's a grievance cell two. You need to approach grievance cell 2, and there also if your queries are not addressed to your satisfaction, then you have to approach somebody known as health insurance ombudsman. They are persons appointed by IRDIA, and they have the responsibility to hear you, to hear the insurer, and then take a call as to who is right, and give a judgment per se. Most cases, in 60 to 70% cases, health insurance ombudsman is the place where things get solved. And after that, if you're unhappy with the health insurance ombudsman as well, then the final call that you need to take is go to the courts first. This is the laid out framework, laid out roadmap. We've written about this. Anybody who wants to read about this can come to our Twitter handles and check it out. We've laid down the framework as to how you need to approach if your health insurance claim or your term insurance claim gets rejected.
Right. Well, that was pretty much giving us a whole overview of how one can go about, right, from buying your health insurance policy and what the checklist that you need for that, as well as what you need to be telling the insurer when you go ahead and buy a policy. And of course, then coming to the claims and settlement part of it and the checklist you need to have there. Well, Aditya, it was really a pleasure talking to you, and thank you so much for helping our viewers understand where exactly what all you need to do while buying an insurance. Of course, these are some important questions and clarifications that one needs, and you've pretty much tried to solve them, or at least give us some reasoning, and that starter kit that I was talking about for somebody who's looking to buy insurance, you have definitely tried and simplified that for our viewers. So thank you so much, Aditya
Thank
Shah
you.
there of Hercules Advisors, helping us understand or giving us a one-on-one of all things insurance. Thanks so much for joining us.
Thank you.
And to all our viewers as well, hope this was helpful and you got that kind of understanding of what all you need to be looking at when you're buying insurance, whether this could actually be, you have that checklist ready there in front of you. That's how you can go about buying insurance. Well, that's a wrap on today's edition of Daily Finance Wrap. We will be back with more such interesting interviews, as well as videos which will try and help and simplify your personal finance needs. And also, on a cautionary note, it is a holiday tomorrow, but the holiday is for all of us here in Mumbai and Maharashtra. Please go out, those above 18, go out and cast your votes. That's what we would want to encourage everyone there. But for now, it's a wrap. Thanks so much for watching.